Okay, hi there guys. Just let me know if I'm coming through okay. Just checking up on a few things before we get up and racing. Where am I? That's not what I wanted. Just watching that Hang Seng, so nice little trade there, but heading south. G'day Nathan. Just wait till a few more people get on there and we'll jump right into it. Oh yeah, mate. Anyway, doing all right. This market's all fun and games at the moment. I just saw a news article pop up or something pop up about another hefty stimulus package from the US. So really trying to smash that US dollar, aren't they? They don't want any strength in that. It's going to be more of the same, I think. All right, we'll get into it. Welcome to TradeSetup. Live stream, it's the 29th. Yep, 29th of March. So anyone that hasn't seen it or listened to us before, welcome. Feel free to jump onto our Twitter. You can see at the top left-hand corner of the screen now, that's our Twitter handle. If I'm saying that right, for the IT gurus. Facebook, the top right, and subscribe to us on YouTube. On the bottom right-hand corner, you'll get a whole bunch of stuff that we're sending through. Educational bits and pieces, so worth subscribing there, and much appreciated if you do enjoy the content that's pushing out. Yeah, leave us a like at the end and help us grow the channel a bit. Much appreciated. So we'll get into it then. And just remember, by the way, it's only general advice. So we have to put that disclaimer up there just to make sure that everyone does realise that it's all my own opinions. Anything I see, based around my own trading style and stuff. It's not advice to buy or sell anything. So it's just what I see playing out. So as long as we understand that, we're all good. Right, let's get into it now. So what I want to talk about today, we just change something over here. There we go. Should get a better view on the screen now. Yep. So what I'm going to talk about today, it was a good little, I got an email through from someone. Pete shot me an email. I was just asking a few questions about going with the flow. Essentially the bias of the market, and do you take note of the market? And yeah, I do for sure. So that's what we're going to talk about today. For the first half an hour, then obviously get into it, and you can put up a few shares that you want to look at. I've got a couple here. I just want to keep an eye on. The market's down at the moment. It's playing around with a couple of key levels. It's very choppy. So at this stage, I think it's very, very important. When you're in a raging bull market, g'day Pete. In a raging bull market, things are easy and you get complacent, and people do get complacent, and especially lately. That's why I think there's going to be a few, was it rags to riches to rags again stories that are be coming through down the track, purely because people have had it a bit easier than normal. I mean, this market, the way it's bounced is a lot harder than more, especially in the US. US has bounced hard. No one expected that sort of bounce back after getting flushed. Last year, it was about a year ago now, getting smacked down in March, and then it's bounced back into, just keeps pushing into new all-time highs. I know it's US dollars, but the way they're printing money is just going to create some problems. Obviously, it's going to create massive problems, I think. The Fed's going to be caught, all that sort of stuff. So people have had it easy, is what I'm trying to say. Relatively easy. It's just buy the dip mentality. Sooner or later, there's not going to be a dip and it's going to be a sell-off, and those people will get caught. And it'd be hard to change that mindset if you're not focused on your risk. And because a lot of people have had it kind of easy, you just start focusing in on the shares. Okay, this is just another dip, and you don't know where your risk is because you haven't had to worry about it. It's pretty simple. You haven't had to worry about it in the past. Well, at least for the last year, it's just been that by the dip. And people are being rewarded when they do that and it kicks on higher. Now, it's times like, and it seems to be a bit some strange action at the moment. It seems to be getting supported. You see the way the US rallied the last hour on Friday, up 200 points. But that was just a big short squeeze, some shorts building up during the session, and they got squeezed out into the close, or they were rebalancing into the close. No one wants to hold a short position over the weekend because just don't know how it's going to open up on Monday. Even short or long, longer terms are longs are a lot easier to hold because the markets are geared to go up. Everyone knows we've got the stimulus supporting not just the US but Europe as well. The Fed reserves all around the world are basically going to do what they can to not look like idiots and just support this market. US is doing it. Europe had they that sort of buying the dip mentality as well. The Fed's going to support, or stimulus is going to support that that market as well, and try to get them out of back on track, I guess. And you've also got on top of that, you've got obviously the vaccines kicking in. So Europe's lagging a bit, and I think that's what's supporting the US dollar because it means people are flowing into the US because they're on track. They've got doubling the amount of vaccines coming through apparently. Biden's has promised that to double up. So that means that the vaccines are really going to start taking hold. That's what people are looking for anyway, compared to what's happening in Europe, where they've got further outbreaks and lockdowns, and struggling to get the vaccinations pushed through, which means it's going to be a bit of a drag on that economy in the EU, which means everyone's sort of pointing towards the US dollar. But with all this stimulus, it's hard to know if they're going to pump out. Well, we're just pumping out a whole lot of stimulus now, and it's coming into the US, and they're talking up more stimulus for healthcare and other areas. I think it's a toss of the coin because you've got massive amounts of US dollars going to it. So it's supply demand, more supply, less demand. It's just you would think that US dollar is going to get smacked down. But at the same token, you buy the US dollar because it's outperforming other areas, other currency pairs. Sorry, other currencies, not currency pairs, but other currencies like the euro, the Aussie, the pound. It's well outperforming because you would expect inflation is going to start to kick up. So there's that each side of the fence, and at the moment, the US dollar is inching high. It doesn't mean it can't get a big sell-off and another big run lower. But yeah, for now it's inching higher. So what we're always trying to do, I think inflation, if you're looking at that side of the fence and inflation concerns, you'd be worried that we're going to have a big sell-off. It's obvious. I mean, inflation, and it's not, we're going to get inflation, everything's growing. People have already factored in a hell of a lot. Markets are factored in a hell of a lot. It potentially remains the only place to be is into, well, not if you're going to get inflation and you're looking at higher yields. There is going to be another place for to get yields on bonds, not just the stock market all the time. And the stock market's overvalued. Everyone knows that. It could keep pushing if there's nowhere else to really go. So there's the other side where people are saying, well, bonds are not going to be a problem because you need CPI to be at what 3.5% or something like that, or inflation levels to be up to 3.5% before the Fed is forced to raise. They're going to let it go longer than normal. So inflation could start to kick off. Now, if they keep throwing money at the market, you can't see how inflation is not going to kick up. It's just where it goes to. It's as simple as that. If if it's sort of contained fairly much, or you get that spike which they're expecting, and then it comes back down, it's contained, then don't expect too many interest rate rises. Then don't expect bond prices to go down as bond holders sell them because they know that they can get better yield. They get out now, buy them back a lot lower with a better yield attached to them. If that's not going to happen, then again, you've only got the only place to be is in shares, and you will get from overvalued to even more overvalued, in my opinion. So you've really got to assess all these different things on where you stand with your bias to the market. Okay, and and that's the story we're trying to keep. I keep reading about and I keep looking into, how does, and it's trying to build that picture as you go. And it's not just reading one article. It's seeing how the US dollar reacts to different news announcement, to different things. So you can get that longer term bias of where the US dollar is going, the longer term bias of where your currencies are going, and where your bonds are going. And that was a big talk recently, is about bonds, yields going up, and they're going to create this, that, and the other. There is still a massive problem if we're going to get that inflation, it's going to hold. There's going to be selling in the bonds, and I don't know if the Fed can do a lot out of it because it just means that no one's going to want to buy in the bonds. Physical bonds, like we said before, they could support the secondary market just by soaking up any of the selling pressure. Fine. But if they want to raise capital to pay off their debts, they can't get it unless they raise the yield attached to those bonds and make it worthwhile for people to load up and give dollars to the Fed or give dollars to the US. Obviously, there's a lot of different spinning wheels and things involved and all that, but that's my basic view at the moment. So really, it's all linked into inflation, and the more, just imagine the more dollars you throw at it, how can you avoid inflation into the US? Okay, so they're the sort of things we're looking at. Now let's go into, we'll look at, I'll just get this up here. So this leads into what I'm trying to get through. I'll just clear that up. What I'm trying to get through regarding what Pete was mentioning about bias into the market. Where's the bias? Do you follow the bias? Yeah, I do. I do a lot, and there's been times, I'm just trying to show if I can get back to it. Actually, it was somewhere in here. At this stage, for example, I was looking at this kind of market, and here we're finding, a lot of sort of resistance in here. We're starting to hold lower highs, and we've got this low that was in play down there. You figured, okay, if we break that, then we could roll over, and that big sell-off, we've had a leg up, roughly 50% retracement, and we're looking to go down again. To me, that opens up a move potentially to the downside. We're looking at that for quite a while. So my bias, and it's not just, wouldn't be just my bias, but there would have been a lot of bias looking down at that stage, and we broke, held, popped back up, held an inside level, and started to rally. So about here, and especially once we come off this zone in here, if everyone can see that, we have to change our bias. It's as simple as that. Once you start getting this push up through the previous highs, and then you go in a bit of a pullback mode, and you start holding higher levels, especially when some, we've got prime little zones in here. If you can see that, can everyone see that? Is that clearer? You've got a higher low holding. Showing you that action. You have to change your bias, okay? So there's all these little factors I was watching, and as soon as I saw that, I was purely biased up because I'm expecting that ASX to have another leg up or, continue on. When it gets smashed down like that and starts to bounce back hard and essentially goes sideways from there and consolidates, okay, you can roll over from here. Once you stop thinking about, well, the market doesn't want to go any higher, it runs out of steam, it's either going to do two things: going to consolidate, wash out some buys, wash out some sellers, chop around until it starts building a direction, until people get a bit more confidence to jump back in, or people on the sidelines get confidence to jump into the market, or the buyers just get fearful that the market's going to sell off. Once it starts to build that, and ideally you need a bit more time to go past. Once you start building that, you've got to change your bias. And that's why at that stage, at this stage, nice and early, when we're looking at, it's just somewhere around here. Okay, at that stage, you don't know which way the market's going. You can't say it's going up. You can't say it's going down. There is lower highs holding. This kind of was a bit of a bit of a heads up to, okay, maybe we're not going to see the weakness we can expect. Okay, so I'll just drop down that. So you can see the market was chopping around. We struggled to go higher. So when you struggle to go higher, people are going to lock in some gains. The market goes down, and then you've got a whole lot of fuel. You've got to think of it as a whole lot of fuels on the sidelines, ready to come in. Are they ready to come in, or are they, what's their opinion? We don't know their opinion of the market until they start putting their money to work, until they start jumping in. So if you start selling off and you see this extension lower and a really weak retracement and another extension lower, you start to realize their opinions are very negative. Okay. But once you start to see that push down and we come all the way back up, and this was the anchor at that stage, and we flush through that anchor, you have to realize that maybe they're not as negative as you think. Okay, so you've got to start to be willing, if you're short, if you're looking to get short, or you're short biased and you don't want to be in the market, you have to start reassessing it. Okay, and that's a flip side. You don't want to get caught on one side of the market. You don't want to get caught, completely bearish and see it rally, just take off without you. You don't want to be caught completely bullish either and see the market get completely sold off, because you're going to get caught. You can get caught. Okay, so what I'm saying is really just, keep an eye on what the overall market's doing. You have to have a bias of what the market's doing. You have to sort of trade that, say the ASX individually, as in, well, not individually, but get an opinion on that as the price action starts evolving as to what you will be doing with your over portfolio. Okay, so whether At this stage, like I said, once it started to break up and we start to hold the retest of this low again, you have to start to look at it and go, well, if I'm short, if I'm expecting a big sell-off, I've got to change my opinion. And that's pretty much exactly what we did. Um, Market then it popped up through these highs again. You've got to start questioning, my bias is going to be wrong. And as soon as you get this inside level on the right-hand side of the chart, inside high low, the same sort of action as what we just saw back here. We break the anchor to the downtrend, you break it, you start to chop, you hold it at a higher level, and then we go. Here we broke the anchor to the downtrend. Once you break the anchor to the downtrend or an uptrend, downtrend in this case, you've got to stop potentially thinking about further downside action unless you get reconfirmation and start to think we're either going to go sideways or we're going to start to build again. And the same on the downside, when you start, the upside, you start to break the anchor to the uptrend, then you've got to think of consolidation, sideways range bound action, or a potential sell-off. Okay, you've got to start changing your bias. So that's what we're looking at that stage. You can see it's just it's powered on higher. So if I go to where we're at now, I'll get out a decent chart. I shouldn't probably be on the, as you know, this is what I'm looking at now. Okay, so I'm starting to think, well, that's the uptrend for me. And to me, the uptrend's broken. It's just whether or not we're going to consolidate sideways for a while and then bang up again, or we're going to go down. So to me, it's still not just because we've broken, I've defined this as a rising uptrend. And just because we've broken that doesn't mean that we should expect a hell of a lot of weakness. I mean, it could be anything from there. And what we're trying to do is gauge that alone is keeping me from loading to the hilt on the long side. Okay. Or just taking some prime entries on the long side. At the moment, we've only got 2. We've got about 3 on the boil that we're looking for. We only ever have 10 at any one time. So there's a 3, actually, no, one's on pause because they had a capital raising. I don't like to, especially in this kind of market. For anyone that doesn't know that CPH, Creso Pharma, they've had a cap raise. I think it's 19 cents, and you've got this little push to 24, and it's come back down. I always think of those pushes as being a bit of a trap, trapping in some longs, and then they could get sold into. There's always going to be people on the sidelines that have got some of that at 19 that are willing to take a small profit. You just got to start clearing the way. And if it starts holding up for too much, for a longer period of time, then you could probably think that a lot of those shorter term that don't want to take those profits are probably going to run. They've already done that. They're done and dusted, and then we start to head higher again. But at the moment, that weekly chart looks really, really good. It's just that daily chart. It's not daily, is it? That's a 30-minute. We'll get to the daily up there. There you go. That's your daily chart. Daily chart probably just needs a bit more work. I don't like the way it's, it was looking okay. I wanted to see expansion high as soon as they come out with that cap raising. Just put it on pause in my book. Sometimes it can keep going, it can just take off, but I've always got that back in my mind now, especially the way the markets are. If the market is superior bullish, it's super bullish, the ASX itself, and our bias is up completely, it's just complete, it's really obvious, it's higher lows, higher highs, and all that sort of stuff, then you can afford to jump in and keep that as an entry. We had it at 24. You can afford to keep that. Maybe you just widen your risk out a bit, but because it's a positive market, it's not such a bad thing. But when you've got that market that could be potentially going sideways, or we could see a sell-off, it's better to be on the safe side, because if the market starts heading south, then I would expect there's going to be some of those 19-cent holders from the cap raise going to start to book some gains on that. Now, back to let's get my stuff up. Here we go. So that's the ASX for me at the moment. So like I was saying, I really do sit there and look at an overall bias of the market. When you've got this kind of bullish action, yep, you can afford to be kind of loose with your risk in the market, in the individual shares, with expectations that's going to, we could be going up to the highs. Then we don't know what's going to happen. The fact that it's starting to now consolidate, it's still holding. We start to chop around in here. We hold some higher lows, and then we got this little flush down. We know that we're away from the MAs then. Okay, a little flush down, bounce straight back again. Okay, you can probably be forgiven to just keep jumping into the action. But when we start to, I see things like that, when it starts to break down, it's different to what we saw here. That little flush down, it's more of a reversion to the mean. So what you've got is this action sitting on top of the MAs, sitting on top of the MAs. It's kind of away from the average price or that support zone. It's kind of extended slightly. So it's just a bit of a flush lower. It hasn't broken any trends. Popped through a couple of lows, didn't hold that and finished straight back above. So that green candle, you'll see that took out these lows. And actually on that day, it finished up. So that was kind of a bullish move. And it was kind of just a trap some sellers into the either into the market, pushing people out of the market, and then turn around and rally again. And that would have dragged those people straight back in again. Anyone that's got trapped, short, squeezed out, it's buying action, buying pressure. Anyone that probably dived out of the action because they saw that and they were thinking, we'll get another meltdown on our hands, got it wrong and had to jump back into the action and buy back into the action. So it just creates that pressure to the upside, but without breaking a clear trend. Now, what we've done here, we've broken that trend up, and that's why we're getting that fight between the bulls and the bears. We've got a clear-cut resistance at 68.60 thereabouts, which it's faded off that today. You can see the SPY really pumped through. If anyone, when you think, if you're looking at the SPY too as a bit of a heads up, let me just get that push through the highs. That's just a stop run. That's a stop run, and anyone that's looking at that, for the open of the ASX, and we will gauge that action to see how, what you would expect the SPY to be up. What you would expect the ASX to open. We're looking at that, okay, potentially 45 to 50 points up, opening up on the index. Okay, that's all good. But when you go and look, where does that take us? It took us right into that, say around that 40-point mark, took us right into that 68.60 on the index. Now, I wouldn't have expected it to open up 50 because that would sort of break that level. And if the market's very bearish, I'd expect it to be pushing right to that level. And then, so it didn't open up quite as strong as what we thought, which to me is a bit of a heads up. Maybe that range band action is going to continue. It could be another cup and handle, but I just don't think the fact that we've broken that level, that trend up, that the market can just do this kind of action and then just keep going higher. I think it's going to get a bit more bearish before it turns potentially bullish again, and it will need a clear 68.60 convincingly, and even through those highs. But I'm more expecting a bit more rangy action, maybe bang in between these levels, back up again, and then, if we start to push clearly through that low, then that could open up for a decent correction of this leg up. But I wouldn't suggest that's going to happen if the US doesn't roll over. US is super strong at the moment, and they just keep getting bought up, even though it shows weakness. Bang, they're straight back up again. So let's just have a look at that. So, like I say, with bias, I would always try to get my, when you're bouncing around and say, like we are on the ASX, let's go back there, bounce around here. Yeah, you can go long, but you want to be going long in your prime setups, okay? In the high probability setups, not just picking some random ones because it's had a couple of days up. Okay, you could maybe afford to do that when you've got a really bullish market. At the moment, I think we're getting extended. We're getting a bit late in that trend. Everyone knows it's late in that trend. Everyone knows that the market's been going up. Everyone knows the US is going up. It's still continuing higher. So to be taking subprime setups or medium to lower probability setups, it's just not the way I'd be looking at doing it at the moment. High probability setups, because what you could be doing, this could easily back off, but it could find some support again. And it's not going to be a really big sell-off. Now, in saying that, you've got to realize there's two different types of sell-offs too. You're going to get that sort of controlled sell-off when it's resuming the trend. When it's sticking with the trend is still up. You get this kind of action that goes sideways. We start to we get these little pushes down, another push down, that sort of sell-off action. But then it gets bought straight back up. As opposed to something like this, a couple of big days on the downside, you can see that's really opening up that fear factor. Okay, and that kind of a move there, it's going to catch you off guard. And I think if it starts to catch you off guard and you get too many days, some big sessions on the downside, that's going to open up a bigger sell-off. And I'm not going to be, intraday picking up a share because it's been sold off. I'm not going to be starting to load up long. If I get a couple of serious days like we saw back in March, you got a couple of good red days. Maybe the first two you can probably think, yeah, all right. But I'm still, even when you get that, especially after that was one big day, you'd expect a bit of follow through the next day. But what you wouldn't expect if we're going to be strong, you wouldn't expect that third day of follow through right into these lows. Okay, so that there, if you're going to look to, jump into some shares, I'll be waiting more for some confirmation off the index that it's going to get supported before I dive into any share. Because when you do have that kind of a sell-off, I don't think anything can withstand that. Okay, you're going to find that pretty much all shares, especially, the market was kind of extended there. We got into new all-time highs. Anything that's people are holding long and are sitting on profits, and you start to see this kind of thing unwind, and then you obviously get the news start beating the drums of negative news, really pushing that negative sentiment, then nothing's going to be safe, I wouldn't think. And that's the way I would view it. Things like that, once you start, that third day, you're broken down in that uptrend. So you've got to be cautious on times like that. All right. And that's why, now I'm a bit more cautious to start loading up to the hill, because we don't know if it's going to be a shoulder that's going to consolidate and then get a big sell-off, and we start heading back down to 61.90, dropping 300, 400, 500 points. And if that starts the case, depending on what the news is and depending on what the US is doing, it could be another big fear-based sell-off. And like I was saying, if that starts to play out, I would expect you'd really want to let the market flush, let it do its thing before you start to get in, and wait for some more confirmation on the shares. Because like I said, I don't think anything's going to be safe. Okay, as opposed to this kind of a grind. If you get that kind of a grind, you get action. It just goes one day down the next day and then down the next day. That's different to something that is starting to up, down, up. You get we're not breaking out of the lows by very far. We're not getting through the lows very far, and we're having these deeper corrections. That there's a lot different price action, which would suggest that it's a bit of a pullback than that kind of price action one day after another. Okay. So I think there's going to be a time when that's going to play out again, that kind of action that's going to get sold into, and that there you've really got to think of two things. So you've got to think of well ahead of the game. And this is what it goes back to looking at what the macro environment is, what could trigger a sell-off, and keeping a tab on all of those factors, your bond yields, the US dollar, stimulus, vaccines, all these sorts of things to build that picture. If the market starts to get a bit too antsy, then we could be in for a decent sell-off, a decent correction. At the moment, it's still getting held up. I mean, look at this couple of days in the S&P. I think this overall trend, just take that back. Yeah, I still think that's broken. And the US, yeah, it could go through those highs. I just wouldn't be too confident buying into the highs again. You could be getting something like this, a bit of a wedge formation, and then you start to break out. I'm not too confident once you start getting this initial weakness showing on the broader market S&P. That sort of pop through of that rising uptrend, I'm not too confident that that's going to just continue on its way up. All right, then go look at the Dow. Yeah, that wedge there, it hasn't really broken like the S&P, whereas the S&P is probably being dragged down obviously by the NASDAQ. But I would expect NASDAQ's having a few problems. If we start to look at yields ticking up again, I think the that NASDAQ might find some more problems again because they're obviously highly leveraged. And if you're looking at debt levels rising, yields rising, bond prices falling, then the NASDAQ's probably going to get some more selling pressure coming into it. And a lot of people will be looking to unwind some bigger positions. Okay, they could be unwinding now, you don't know. All right, the way that you got a bigger sell-off, when we start to pop up to this level 13,270, and we're backing off from there again, then I think there's going to be a bit of an unwind there, and that's going to drag on the S&P. And if that drags too much, and we start getting a bit of a run on the downside, then obviously the Dow is going to go with it. The news can talk about rotational, to as much as it wants, but if the market wants to sell down, it'll sell down. Look at the bonds on your daily chart. That's not positive to me at all. And I've drawn up sort of this scenario. We flush through that level. Now, if we start, I would have thought if we're going to bounce and hold up, prices are going to start to hold up, you probably expect a bit of a deeper push back up to these, these highs in here. So at 133, you would have expected a bit of a deeper pullback. We haven't pulled back as deep, so it could be that the market's looking to hold that level and edge its way down into the support zone of 128.07. Now, if that's the case, that's going to be meaning rising yields, weaker bond prices that might start to, and there was a bit of a sell-off into bonds because of margin problems. If you're loaded to the hill on bonds, the bigger funds, and they've got a bit of margin issue, they might start to look to unwind, and it might trigger another unwind because of margin. And if they're doing that, there could be a bigger unwind into the overall market if they get caught, or if they don't want to close out bond prices, you might find there might be some selling into shares, all that sort of thing. So we'll keep an eye on that. Now, is there anything that, just before I continue on, is there anything else you want to take a look at? Take a look at some shares, put anything else into the chat there, and we'll get into it. Otherwise, I'll just keep plugging away here. I've got a couple of shares I'm going to look at. But long story short, with regards to, to answer your question, Pete, was to, I would definitely be biased, have an overall bias into the market. I think it's kind of important the way, especially now, we're not, I know that if anything you read into the US is talking about we're coming out, the economy is expanding, GDP numbers are higher, getting higher. And the Fed's coming out and saying they're not raising rates because they know that they're looking to raise rates. If they start to even hint at it, the market will sell off because the market in the US is extended. And other markets at the moment are realizing that. And that's why we're getting chopped into the ASX, because the ASX knows that the US is extended. They know that there's potentially inflationary problems, meaning a higher US dollar, which would weigh on commodities, which is going to in turn probably weigh on the Aussie market. So you can just see the latest price action into the ASX is heavy. It's not all one way. It's a big fight still. The way we backed off today, when a lot of people woke up today looking at the finish on the SPY, going, oh, that's great. Looking at the finish on Friday, look at that. Jump into the market on the open, and they've been disappointed with the sell-off. And if you're just always biased bullish, you're going to get caught. You're going to get caught. There's going to be times when it's just not going to look back. You get those 3 days in a row, selling, breaking some levels, putting pressure on other buyers, and then it starts to capitulate. That one will feed off the other. One trigger, some serious selling will trigger the next wave of selling, and the next wave of selling if you don't get anyone willing to stand in the way. And there will come a time that people won't willing to stand in the way. You're going to get less and less people looking to buy the dip in a way. So I would always be looking to be biased, have a bias to the market. And even you'll see it too. I think if you're looking into some different shares and looking at the setups, our setups are not working as well as they have, which means that the market's not as biased. I mean, you get the breakout, that's fine. And then you're getting these retracements. So when you're getting the retracements, it's a simple fact that people are not holding for long. Not everyone's a raging bull. You're going to get probably bullish people, bearish people, and that I would assume percentage is not going to change. People just can't help being bullish. I've had a lot of people I've spoken to in the past go, oh, don't be stupid. There's not going to be a sell-off, because of this, and this. That's fine. You can do whatever you want, as far as I'm concerned. And the same with bears. You're going to be people that are just naturally massive bears, and everything's a sell-off. Everything's an issue. Okay, and then you're going to get that fluctuation in the middle. They're going to be swingers, swingers between buyers and sellers. Okay, and they're the ones that are probably going to move in that market. If they start swinging too much to the bear side, then and then there's going to be the bulls that are going to get the ones that haven't got the mentality to change or are not focused on the macro environment. They're going to get caught. The bears are going to make out at that time because they're always bearish and they're going to be selling in the market, and they go, see, I told you so. Problem is that it only works 5% of the time. So 95% of the time they're going to be losing if that's the way they position themselves into the market. So I think it's that in-between sort of a group that will move the market. Okay, so I would always rather be in that in-between group. I'd rather be the swinger. analyzing my bias on the market and looking for those setups. So if you're getting the setups where they're kicking off and stopping dead and they're coming back into it, you've got to realize what's happening. Not that saying that that's going to create some selling. It's in that flux, I think, at the moment. Right? And I think what CPA is not really one. LCK is another. That's one that we're long that 17, which it's got a massive offer at 17. It looks like someone's trying to hold it down, but it didn't kick on. It touched 17. It's just holding there. I mean, on a weekly chart, that looks great. Weekly, you've had this little bounce off the EMAs. We've got the EMA starting to rise, 20 above the 50, 20. That the spread between the two is starting to expand, which is bullish for me. We might have to sit through a little bit of a pullback, but there's not any. In the past, that kind of action, if it's a really bullish market, you would have gone 17, you've gone 18, 19, 20, and you probably would have just taken off. But at the moment, we're not, because we're seeing that there is sellers hanging around, willing to take some profits in any sort of slight sign of weakness. And there's other ones that are not kicking off. I'm just trying to think of as an example, but I'm not getting it. All right, let's talk about some shares now. I'll get onto this one here. So we've got BLD. You can see borrow, it's trending higher. Not a problem with that. On the weekly, I think we're extended. Okay, so for me, if you're not taking into account your overall bias on the market or what it's doing, then when it's kind of an extended market, I don't think it's going to be anything new to anyone. If you're looking at, especially if you're looking at charts, if you're a technical analyst, you can look at that. You've got the big sell-off here. We've bounced back. We've come back, above that level of the sell-off. We're into this zone in here. Let me just draw that up. Get my drawing tool. I want to go from roughly here. There we go. Right, so you can see that it's hitting a level there. Right, it's reacted off there. It hasn't broken any trend. At the moment, that's probably a trend there. Now, to me, there's a good chance that if we're going to start to fade off, if it's going to break down, I'll probably do it fairly soon. But if we start to break back down to 5 and trade down at 5, that means that uptrend's broken. This level's holding. It's not so bullish after that. You'd want to do that soon too, is break up above this high, which is, what's that high there? High 574. Okay, so if we don't pop up through there soon, there's a chance that it's just going to, it could keep grinding higher. Don't mind about that. There's a chance we could be a bit of a sell-off. What we're seeing as we get higher is a move down in volume, which is not a good sign. Okay, so as we run out of buyers up into this level, it's a bit of a heads up that, obviously we're running out of buyers when you come into that level. So it's a big ask to us, someone on the sidelines, enough volume that we're going to break and just continue this trend higher. You can see that, between here and here, which is probably about here and somewhere around here, we stayed overbought, but now that momentum's starting to shift. Okay, you can see it in the MACD. The momentum's starting to flatten out. Now, if it's a bullish market, it shouldn't really flatten out here as we get out to new highs. You should see that it starts to lift. Okay, but we've gone from being a bit overbought here, a bit of heat coming out, not really coming out. It's still grinding higher. And then we're starting to roll again. Stochastics are getting a bit overbought. We're getting that maybe divergence on stochastics. We're getting that momentum starting to fade when we're up at this level. So for me, on the weekly basis, not such a high probability if you're looking for a setup here. If you go down to the daily, the daily, it could be a setup off here, but I'm not considering to buy that on a daily basis because of that weekly trend. I'm sort of looking at we could start to fade. Now, if we start to break down from the MAs here, there could be a bit of a, well, it's going to be, move back down towards 525.5. It's probably going to pressure that market lower. Does that make sense? So looking at the weekly, I think we're getting a bit extended. We're running out of momentum into that 575 area. And if you go into the daily, it's a big ask after that trend up for it to just continue on. We've used up a lot of fuel on that move up. Okay, so I'll just be, if you're long that, stay long. It's as simple as that. Just make sure you know exactly where your risk is. But if you're going to get long, I don't think that's one of those high probability setups that I want to dive into. PME. PME looks a little bit better, and the reason is because you've had a good little punch up back in, well, the start of the year, in Jan. Good punch up, held, took out into new highs. I don't know what that candle was from. Probably obviously news announcements, gap down on the open and just flushed. So those sorts of things are engineered. You get that sort of announcement, all the instos will be sitting on the sidelines trying to pressure it lower and just pick up some cheaper shares if they believe in it. But if you sort of discount that, we've had this kind of shallow pullback. And to me, it looks like we're going to get that expansion in the MAs, as in MAs are compressed and we're looking to go from a compressed MAs to they start to expand apart again, if that makes sense. And you're looking at things like that, as you come up, the MAs are starting to press higher, the 20s starting to push away from the 50 and so on. And that's a good sort of an expansionary market. If we're getting the start of that now, where the 20 starting to lift, it would mean that we're going to get supported around 44 at this level. And if we start to hold here, you probably could look for a break of that high at 44.83 with your risk just below this. If it holds up, we're on the daily. If it holds up here, and that's all off the daily, and that's because we've had a good little run up for whatever reason. It's consolidated. It's holding sort of that top third of that rally within the longer term rally, which would suggest that there's still some strength into that market. Okay, there's still some strength into PME at this level. So anytime a market breaks, you've got a trending market's higher highs, higher lows, higher highs. Now, when those higher lows or the pullbacks are quite shallow, there is some lingering strength into the action. Okay. When it's a deeper pullback, you've got to question why. So the deeper the pullback, the less buyers are willing to stand in. And that's what happens later into trends. When you get a market's trending higher, it's moving higher, the pullbacks start to get a bit deeper. Yeah, I'll have a look at those. I'll see if we can have a look at those EPN and LTC. Cheers, Joe. So when you get markets that they start to get late, and the overall market started to get heavy, we start to get deeper pullbacks, and it can't hold a shallow sort of pullback, meaning that if you're a buyer, you're starting to reassess it, especially if the ASX, for instance, is starting to roll or is looking like it's kind of heavy. When you're looking at it's kind of heavy, it starts to run out of buyers. The stock itself would start to, any buyer's going to think twice about it. But if they're not, it's still showing some lingering strength. Okay, so for me, that daily trend, it's up. And if we go to look at the weekly is not too bad. I think it is extended. You've probably got to question how much higher you can go, because we have had this run up, one pullback, got the lows in below $15, say somewhere around, was it 12? Yeah, low 14.50. This low in here, and that's the second leg up. So you got the first leg up, pullback, second leg up on the weekly. So when your second leg up on the weekly is looking extended as well, you could probably look, that's a legitimate trade if we start to lift again. But if we start to fade at these highs, you'd be quick to jump out. You'd be quick to tighten up your risk. Okay, does that make sense? Because of that weekly. Now, if that weekly was somewhere around here, for instance, and we're getting that set up on the daily, great. You can open up your risk because you know that you're at the start of a potential leg up on the weekly, and you've got a nice little daily setup. Okay, daily showing some strength. The weekly is at the start of a potential move higher. We're talking at this level in here. We're looking in here, looking to break even here before you get to these highs. The previous highs around 37.50. Anywhere in here, if you get this kind of setup, worth throwing some good risk at it. But when you start to get a bit extended, we're into new highs. The the weekly to me is showing a bit of extended price action. You've got to ask yourself how many people are on the sidelines willing to continue to dive in to support your thesis that the market's moving higher. Okay, and couple that with potentially the ASX going sideways, getting some more range band action. It's going to get a bit heavy, and that to me just means that I'm not trading in the unknown. I'm trading in the known. Okay, it's known the market's heading higher, da da da, which means that you used up a lot of the fuel on the sidelines, which means that there's more people long, at different levels that could be forced out of the action if we run out of buyers. Okay, so that's the way I view every market pretty much. I want to always trade sort of in the unknown when it is a bit harder. If you're waiting for an easier trade, easier confirmation, you're trading in the known. And it can work in shares if you're trading. I'm assuming Joe is trading crypto and stuff. If you're trading things like indices, FX. You want to trade in the unknown as much as possible, okay? Because when you're trading in the known, things always run out of steam fairly quickly. Shares, you're lucky enough to have a market. You're trading in a market that is geared to go up. By that I mean shares are geared to go up, and 90% of people are just bulls or buyers. So any pullback most of the time is just a pullback in an uptrend. If that makes sense, anyway. When you look at the ASX, but if the ASX started to roll, you just look for that time when it could get a good sell-off, and that's what you're always trying to protect yourself against. What about GLH? All right, GLH. Put that up. Shot. So here you'd have to go back to the weekly. The week is not looking too bad. Obviously, very very thin. So it's not something I would actually. It's not something at all that I would be looking at purely because it's so thin. You've got a 48-cent stock or a 50-cent stock. You've got 2,000. So what's that? A grand's worth of shares on the bid. And then below that, you've got 5 grand's worth of shares and another grand and another, 1,500. It's just very, very thin. And there's next to no offers either. So that could go because there's no offers if it's got some good news or whatever, if it starts to get a bit of a run on. But it's not something I would personally trade at all. Just looking at that profile of the shares, the bid and the offers. Okay, if you look at the actual price action on the weekly, you've had a good run up here, you've had a pullback, consolidation sideways, a deeper pullback, and I'll draw that up because I think it's interesting to take note. And this is something you'd apply to most shares, the way I'm viewing it. So you've had a good run up, and that's kind of a steep move, a good pullback, quite steep here. Then you've had some consolidations, quite clear, consolidated through here. And if we're not going to lift, anyone that's bought late and is holding on and is even buying on these pullbacks here, buying as market's going down, they're trying to pick the bottom. When they start to feel that we're not going to go up, they might be forced into closing, whether they're using margin or whatever, you don't know, but they might be forced into closing. Now, this move down here is one to take note of. I just want to draw that up. What am I doing? Take note of that. That's the level roughly there. Now, when you get through the lows, we're holding lower highs, we're pressuring down, but that angle of descent is a lot less steep, or is not as steep as the initial one, which would suggest that buyers are stepping in. And you sort of know that too when we get to, you get to the 10-cent mark, you don't get far below the support. So that was ranging between 20 and say 45. So it's quite a wide range. Okay, we pop out to the lower side of that range, or you get through that support zone. You got support 1, 2, 3, broke it here, edged their way lower, but then we started to get bought up. And the way we've been bought up is a lot like the start of the trend, okay? So what we've done in this action from 2014 all the way to 2020 is really clean out a lot of buyers, okay? And I don't mind if you see this kind of action, good hard run up, good hard sell off, relatively hard sell off, and then you don't get too much action. Then you take out the lows, and you don't go through the lows very far, and you start to bounce. That's a good little sign for me. And then from there, you could have been buying if you could, buying in here on this sort of run up, especially the way we've accelerated back up again off that level after not taking out, and looking at the angle of descent, like I was saying, that trend down is broken by the time we get here, and then you're looking for an entry. So now, is it going to be late in the trend? And that's all you're really asking yourself. I don't mind whether this here, we could be looking up to the highs again, up to 75, that's fine. I don't know what the news is. If the news is supportive of that, great. You could be looking to the highs. At the moment, it's getting supported at 35. I would ideally, from here, like to see that pull back, and then go. And I know where my risk is. Then I could sort of minimize my risk. And you've got to take into account the very thin market too. So you don't want to be hanging around there. But if it's going to go, it's going to go. Okay, so I'm sort of thinking if we chop around here for a while, we even have a couple of down days and it gets supported, then maybe a break up through 50, anticipating a break through 60 and a push into 75. Okay, so definitely it's on the march up. Okay, and that comes on the back of all this price action prior. Okay, the way we consolidated here, it wasn't ready to go up. So if it's not ready to go up, it's probably going to either continue to consolidate or it's going to clean out some buys. Okay, clean out some more buys. And when you pressure down, it just means either no buys, there's no buys in there, and there's just sellers slowly edging out, just giving up basically. And then you get through the low, and they all go, "Oh, thank God for that." And then we start to bounce back again. Anyone that's been selling in here, they just see a break of that low, is probably chasing it back up again. Okay, so yeah, bullish to me. It's just I would want to see that high low play out and see if we can get a bit of a run on to 75, even if you can push into new all-time highs. All right, but like I said, that's the price action. It's not something I'd trade because of the volume in it. It's a very, very thin stock. All right, now let's get on to see if we can get some of these cryptos up. EPN and crypto LTC. So EPN on the ASX, I'm guessing. Epsilon EPN. Now that's one you don't really need to look at. If you're looking at just the weekly, I wouldn't be buying into that because the market's not on the rise. It's as simple as that. My theory is buying on the rise, keep yourself out of trouble, put your money to work at the right times, and you're not trying to be a hero and pick the bottom, pick the top to enter and exit. All you're trying to do is take chunks out of the market. And if the market's heading south, there's no confirmation how long that's going to go down. There's no confirmation, that we're heading higher. It's actually going down. We're not heading higher. Um, there's nothing at all to say how long it's going to go down. And if it's going down, are we going to consolidate? We could consolidate for a week, a year, 5 years. You don't know that. So if you're just buying on the lows there, you could be sitting in that, holding a position, whether it's against you or you're actually in a slight profit or you're just hovering between break even, it's oscillating between gains and losses for you. The fact that you could be holding that for a longer term until it starts to confirm a leg up or it starts to push up, that capital that you're putting into the market is wasted when you could be trading a chunk here, a chunk there. You could have traded 3 times with that capital before this market starts to kick off. So that's why I'm always talking about buying in buying the unknown when the market's on the rise, not when it's starting to come down. You're not buying on the support level. Go, okay, I want to buy off the support because I think it's extended to the downside. Don't ever try to judge how far extended it is down. Let the market tell you, okay, because you could have been thinking that like here, okay, we've had a move up, this pullback, oh, it's overextended. Okay, look, I was right. And it goes, oh, hang on a second, maybe I was wrong. And then you sit there, you're holding it. No, it's okay, it's okay, it's okay. And all of a sudden you've gone from, buying around 60 cents to something that's sitting at 20 cents. Okay, you're down, what, 75%, 60% on that. And you're just waiting for it to rise. So you go, okay, now I've got to put that in the bottom drawer and forget about it because it's not rising. I could be sitting in that for another week. It might take off tomorrow. We don't know. It might take off this time next year. We don't know. Okay, if you're waiting for, I don't know what they do. If you're waiting for some sort of results, yeah, okay, it could do that. The fact that it's a really low cap stock as well. Some of these have some good news and then they have to prove themselves. And while they prove themselves, that they do nothing. And you get people who bought it up here, have been waiting, and they're forced to lock in a loss or they're getting sick of it. They're not willing to hold it. And then the market takes a turn for the worse and there's more people willing to sell it, no one willing to buy. And then that's where you get these sort of grinds lower or acceleration lower. So back to buying on the rise is you want to buy when you've got some sort of confirmation we're starting to kick up. You've got a bit of volume coming in and we start to take out some lower highs. So if, say tomorrow we start to spike up through 30 and you take out this lower high here at around 32, 33, and you get a kick up in volume, that would perk your interest. And then you're potentially looking for, why has it picked up? If there's no news, it doesn't necessarily need news to kick up. It's the anticipation of news. There's always anticipate that someone knows something you don't, and it's a pump. Even if, God forbid, it's a pump and dump, meaning that it gets pumped up because it's a low cap stock. It's easily pumped. It's got a bit of a, there's groups out there that do that time and time again. Don't have to worry that it's a pump and dump. You have to worry about being in the right time, being out at the right time. Don't ever fall in love with it. So if you get something like that, and everyone starts talking about it on Twitter, oh, this is great stuff. Look at it fly. Da da da. It's going to do this, this, and this. Great. I'm happy to jump in, but I'm also very wary that it's a pump and dump. I'm not willing to, sit there believing the story, because they will tell you one thing, and while they're selling, it's as simple as that. Pump it up. It gets up here. The story is fantastic, according to everyone on Twitter. I don't want to be too negative, and they're selling into you while they're trying to keep that price higher and get more gains and more bang for the buck. So there's things like that. So if you do start to get that little pop, it doesn't really matter too much if it's going to be a pump and dump. It's just you've got to trade it accordingly, according to that price action. Something like that, when it spikes up here and you get that red day, I'll be out the next day. Pretty simple. Even if it comes back up, you get a second nibble at it to get a slightly better price. It doesn't really matter. You've taken a good chunk out of that move. Okay, and that's the aim, like I said. And if you're taking a good chunk out there and you're set, over the last few years you've put that cash just to good work somewhere else, then that's the name of the game. And that's trading. That's not investing. That's trading the market. What was the other one? Crypto LTC. Was that Litecoin? Probably got that, haven't I? Here we go. That on a daily basis is on the rise. It's pretty simple. You got your key levels through here. The fact that we've had that rush up there, if I'm looking at just a daily, I'm not looking to trade it off a weekly. To me, that's on the rise. That's basically, give or take your support. I think that we've got a lower high in play. Okay, so you've got to be wary that we've got a lower high in play. It's quite a broad contraction phase. So I'll be looking at two things. If we break this uptrend, okay, whether it's from here, if we just break down and we come into that support zone again, I would take it off the cards for me that we're going to rally from here, and I'll be just waiting to see how we hold. I'll be looking more contractive action. Whether we contract and we start to hold up there and we do this kind of thing, then I might have to wait till we start to build again. So be it, and then I'm looking for my higher low off that level, because I know that we've broken that uptrend. If we could just do this for quite a while and we're still holding, and then bang, we break to the upside. As the higher lows still hold, that uptrend still holds, it may have some work to do. So I'm looking at two things here. I wouldn't be buying just off here, because there's the chance that we break the bears start winning out and we start testing this support. Then we want to see what the bulls' reactions are. Okay, are they going to hold it, or are we just going to get a bigger sell-off? We might come to the top end and then start to break down to that level, and then we get a bit of a grind higher, and then we get smashed down and we take out that level. So you don't want to buy it straight at that level. You want to buy off confirmation. You want to know exactly where your risk is to enter into a new position. Okay, so for me, off that daily, trend is up, but we've got this lower high we have to worry about. If the market was really, really strong, you probably should have pushed into new highs. The fact that we've had that good run up, okay, and we've had a good pullback back into this zone. So what we've done, we've got this leg up here. We've contracted, or we've given up, 70% of that move. So to me, that's not such a strong market. And if it's not such a strong market, I want to see more evidence that we're going to build for a new leg up. Okay, and it might just do it in that form. We might have to come back down and retest here and spend a lot of time confirming that level, even flushing it, finishing back above. But I want a serious higher low to work off if we break this uptrend. Okay, if we don't break up that uptrend, I'm looking for that kind of confirmation, and then a potential high low to work off. Ideally, something like this. Okay, that's what I'll be looking at there, because I know that the uptrend's holding. we're broken out. And if you just break out, it doesn't particularly mean that we're going to just rally from there. But as soon as we get a high low confirmed, it means that buyers, I'm not just the only one thinking it's going up now. I think there's a lot of other people starting to step in from the sidelines, expecting that that market's going to go up. Okay, and we're holding and then just rallying from there. All right, so that's pretty much the price action I'll be looking at Litecoin. I think it needs some, it's got some work to do, but we'll just see how that plays out. All right, guys, that's probably about the end. I'll probably finish it about there. I think we got through everything. A couple of questions there. We'll see how this goes. We've got the ASX. What am I on? I think I'm on the 30-minute chart here. Not looking too flash. Just check out that 5-minute. 5-minute, we could get some further weakness into the close, or we might hold up above this 68 level. I'd anticipate that we're going to hold the 68, not 38. I expect us to hold that 68 level today. Bitcoin. Oh, look, I'm looking at the pure price action. Look at Bitcoin. I'll clear that out. So for me, just looking at that daily, now we're extended. What's it got? 2-year MA. Is it a 200 MA or 50 MA? You're looking at. Either way, that trend is up. Some heat coming out there. What I don't like is this. Last time we pushed through those highs, you can see it was a lot better move. You go, this pop up. You know that there's going to be some heat coming out of that. Some heat coming out, a reset on the MA, on the 50 MA. It pushed up. When it pushed up, you can see the acceleration. We went all the way from basically 29.5 up to 57. That's nearly 60,000. So what did I say? 29, 30, nearly doubled in price. So that's a good run up without really a pullback. Then we had this pullback. Okay, we come back down and retested. Then we've gone through the highs, but we've gone through the highs not very far at all. Okay, we didn't get too far above that before we've got into correction mode, a decent correction. So that has got me concerned. I'm looking at more at the price action than worrying about the MAs or anything, because I'm trying to judge when that price action is going to feel some heat. Okay, what's going to happen? MAs to me is just a guide. It's not, I don't care whether they sit on the MAs or not. It just means that if it's sitting on the MAs, what is happening to the price action when it's doing that? It's just bounced off the MAs here. That's fine. That's quite nice. But this has got me concerned, the fact that we didn't get through those highs very far before we had a pullback. Okay. If it's a strong market, we should be doing something like that. If that was a very bullish market, we should just plow through. We shouldn't have paused at 61. We should have been 72 before we pulled back. Okay. It's sort of as simple as that for me. Here, and you got to also add to that, how many people know about the Bitcoin rally? Every man and his dog is the answer. People have been talking about it while they're driving in taxis. People have been talking about the Bitcoin rally. It's been in the newspapers. It's been in all that sort of thing. The crypto bulls are out. Everyone's talking it up. So you either position yourself or you haven't. You either don't care about Bitcoin, you're not interested, and you're a share trader, or you're an index trader, or you're a currency trader. You don't care about it, or you'll position yourself. I'd suggest that anyone that's left on the sidelines to position themselves are late to the party. Okay, so what that might, and that makes sense when you're looking at the way it's popped through there. If it popped through the high and it can't continue, like this kind of thing, that suggests there's a lot of people on the sidelines and it's grinding higher. There's a lot of people who want a piece of the action. Now we're probably running out of a bit of fuel to continue that action higher. So what does that mean? It means that we could be looking to a pullback, or we consolidate a lot longer. If people, or it might just need to flush some traders out of the action. So that's the way, like I just described, there's the way I look at anything. How much fuel's on the sidelines? We know that because it's had a good run up. We've had 2 strong legs. We've got for a third leg. It's not as strong as the first couple, which suggests that we're running out of steam. When you run out of steam, what happens? You either go sideways to consolidate and get new people interested when it shows strength, or we're going to get the people that are in are going to be triggered to sell back into the action, and potentially, you get those corrections. And once we start getting good correction, we've cleaned out a few, then we might have to hold a higher low. Something like this would be ideal after a good correction below a level. And if you can get that kind of action when you got the pullback, pop up, holds a higher level, and then jump in, great. Because then even if it gets a weak move through the highs again, at least you're up. You're not buying on the break and finding out it's not much of a break, and you're behind the 8 ball straight from the start. All right, so yeah, pretty much that's that's it for me. All right, guys, thanks very much for joining me. Any more questions, feel free to send us an email to support@tradesetup.com.au. Not in next Monday because I think it's a public holiday, being Easter, so won't be around then. Have a good time over Easter. Stay safe. And if you have any desperate questions, just email. I'll get back to you. I'm always on the email anyway. And like I said at the start, if you can leave us a like, it'd be much appreciated. And we'll start to grow the channel. Anyway, guys, enjoy, and we'll speak to you again soon. Cheers, bye.